Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everybody, Ben Rains here for Top Stock Picks. Today I'm looking at Valero Energy, which trades in the ticker VLO. Valero Energy's core business is refining and processing crude to turn it into products such as gasoline and other petrochemical offshoots. Valero owns roughly 15 petroleum refineries in the US, Canada, and the UK, with a combined throughput capacity of approximately 3.2 million barrels per day. Valero sells its products mostly in those same regions as well as in Latin America. Alongside its refining segment, Valero also runs a renewable diesel segment and an ethanol unit, which are also growing. Valero, like everyone else in the oil and energy space, suffered big in 2020, but it roared back last year in 2021 with revenue up 76% to easily top its pre-COVID levels, and it swung from an adjusted loss of $3.12 all the way up to $2.81 per share in earnings. It then crushed our first quarter 2022 EPS estimates at the end of April on the back of higher throughput volumes. Valero has now beat our EPS estimates by an average of 84% in the trailing 4 periods, and it's benefiting still from that booming oil and gas price, and its refining margins are climbing. So its Q1, after its Q1 release, its adjusted 2022 consensus estimate has surged 87% higher, with 2023 up 63%. This includes some big jumps even in the last 7 days. So this positive bottom line revisions activity helps it land a Zacks rank #1 strong buy at the moment. And Zacks estimates now call for its earnings to soar 500% this year on 33% higher revenue to hit about $152 billion, which would blow away its previous records from back in 2012 and 2013. Valero also grabs an overall A VGM grade, and its refining and marketing segment is in the top 2% over 250 Zacks Industries, coming in exactly at number 2 overall. Plus, all 11 brokerage recommendations that Zacks has for VLO are strong buys. And its 2.9% dividend yield tops many others in its industry, and it's not too far off the recently rising 10-year U.S. Treasury. And that dividend payout appears even stronger when you consider that the stock is up about 100% in the last 5 years to outclimb the larger oil and energy sector's 15% run and its industry's 45% climb. This includes a 63% jump in the last 12 months and a 75% soaring run in 2022 alone. That said, it does now trade about 10% below its recent highs after the pullback in the last few sessions. It's currently trading around $131 per share. So despite that run overall, it's trading right at its year-long lows in terms of valuation at 9.2 times forward 12-month earnings. This highlights just how impressive its earnings outlook is and how much better it's gotten recently. It's also now trading roughly in line where it's been within the last 5 to 10 years. Valero also boasts a solid balance sheet, which will help it continue to buy back a ton of stock. And despite the expansion of renewables and the growth of EVs, oil will still play a massive and crucial role in the US and global economy for decades to come. And the price of oil in the near term could keep climbing, with some projecting that it could hit above $150 a barrel later this summer, up from around $117 at the moment. So that does it for me, and now I'm going to send it over to Dave.
All right, well, thanks, Ben. I've got another idea for you this week. It is Global Water Resources, ticker GWRS. I know it sounds boring, but let's take a look at Zacks.com so I can show you the numbers why. Global Water Resources is a Zacks rank #1 strong buy in the utility water supply industry. Not the sexiest thing to talk about, but it is in the top 41% of our Zacks industry rank. So what are you going to get with this stock? Okay, first, small cap exposure. It only has $315 million market cap, but it's got a little bit of a dividend. So you're going to get paid a little over 2% while you wait on a stock like this. Now, again, doesn't sound all that fantastic, but when we look at these numbers, specifically on the sales and EPS growth, it's not a bad thing. So we have almost 10% current year revenue growth. If you look at next year, that's up to 8%, okay? But translating over to EPS, 25% for the current year. That's going to go up by another 10% next year. So inflationary play, of course, plus a utility name, which is very defensive. Obviously, we know that. and you're getting a little bit of growth, and you have a Zacks rank #1 strong buy. So I think you could do worse getting defensive in a stock like this. So there you have it for my top stock pick of the week. Don't forget to check out Zacks.com/promo for this week's special report on the metaverse and how you can profit from it. For me, Ben, and everybody here at Zacks, thank you for watching, and we'll see you next week.